Everybody, this is John. Welcome to the free video. In the premium video, I did spend some time talking about the incredibly negative ticks we've seen on the NYSE ticks this week and how they don't actually reflect the price action in the stock market and why that's important. And it also makes me focus on things like on Google here, we've got on the 195-minute chart, I do like that we've got a squeeze setting up. We got an RAF buy. We're near all-time highs. But because of the overall market, even though I like Google here, I'm not going to straight out buy a call. Okay, if I like a directional setup, I mean, I was trained to trade momentum. I was trained to trade direction. So I'm I'm fine with buying a call. I know it's a depreciating asset, but in this environment, all my positions are theta positive. Okay, and in this case with Google, it was actually selling put credit spreads. Different things like that. Same thing here with Priceline, and Priceline didn't have a 195-minute squeeze, but let me show you with Priceline, this is like a post kind of an earnings run, and it had a double the expected move after earnings. So I'm expecting this move to continue regardless of the market. And so even though the markets were kind of sloppy today, we still got tacked on $7 here. But again, if you notice this, I am not interested in a directional trade. When we set this up, we set it up as an at-the-money put credit spread. So on something like this, we just want to make sure it's like, look, if Priceline just trades sideways, fine, we could still make money on this. Selling it at $4.25, trying to buy it back at $1. And at this point, if it trades sideways, fine. If it goes higher, that's great. We'll get there faster. But those are the kind of trades that I like to do in this market. And then the other market that made a big break today was oil. So oil here, you can see that the squeeze here broke to the downside. Now this is actually triggering a lot of new trades that I like. Again, I'll outline these in the premium video, but gold. This is actually setting up a great trade for gold as well as the US dollar. And then potentially interest rates as well. So while we're waiting for stocks to become, for lack of a better term, less choppy, there's some interesting trades that we can do there. So now another one here I've been watching too is Disney. And Disney, from a daily perspective, if I go over here and we look at the daily chart, I love the setup. You got a daily squeeze here. We're trading sideways, and you can see one day we're up, one day we're down. But the key with something like this is setting up something that's theta positive. So on this one, even though the calls that I bought are losing money, okay, so I bought these 109 calls for $2.20. Now they're $2.15. I've been having enough other, having a theta positive position that's helped offset that. Okay, now the biggest loss right now is coming from this call debit spread, but again, the way this is set up, it's all manageable. We just don't want to set up anything that's like, oh my gosh, this isn't working, this is a huge loss. This is manageable, and in the case of this situation, it wouldn't take much of a rally, about 50 cents, in order to turn this profitable by end of the week. Okay, so a few things like that just to kind of keep in mind. And then from there, the one interesting trade that I like here is Cara. This is a weed stock, okay, and it has earnings tomorrow after the close. I am looking for a short-term trade here where we could rally into earnings and then hold a few through. I mean, this is a high short interest stock, less than a $500 million market cap. I want to close out 80% of my position prior to the earnings release and then hold a few contracts over where, you assume that it's going to go, that your options are going to go to zero, but if it does have a greater than expected move because of that high short interest, it could be fun. All right, so that's what we got. You guys have a good one, and we'll see you at the next update.